Alright, good afternoon folks, as we head into US trade on Tuesday the 12th of September. We'll have a flick across the headlines where, again, not a great deal gone out. I mean, apart from comments from OPEC suggesting that major economies were faring better than expected despite rising interest rates. Obviously, we spoke a little bit earlier on about the tightness of supply. Russia and Saudi Arabia last week extending output cuts to the end of the year. OPEC remaining positive on growth, remaining positive on demand, so sent oil prices higher. Exactly what we were looking at in today's video. Oil prices higher, clear technical signal to go long as well, which has broke in the last hour or two, so we'll have a look at that once we get around to it. US stocks are on course to open lower. They've taken a bit of a turn for the worse since the video this morning, not massively, but they are grinding a bit lower. Poised to open lower on Tuesday after starting the week on a strong footing as investors awaited key inflation readings for clues on the Federal Reserve's interest rate path. A couple of jitters in terms of the inflation reading tomorrow, likely due to the fact that we've had strong economic data out of the US since the last reading, and also higher oil prices, both of them contributing factors to a potentially sticky inflation print tomorrow, which we'll have a look. So, stocks lower, dollar higher over the course of today so far. I can't imagine those moves extending themselves too much before we get the actual release tomorrow at 1:30. Yen giving back some gains, which is kind of understandable, after comments from Japan's top central banker on a possible end to its negative interest rate policy reverberated throughout markets. So Japanese yen positive off the back of that, has given back some gains, but obviously not going to one directional move forever. But I think markets will probably not take that with a pinch of salt, but I don't think they'll fully believe it, as they will want to suggest they're going to do these sorts of things before actually going and intervening in the currency. So a bit of hawkish chat sparks some strength in the currency. Certainly, in my opinion, seemingly what they want to achieve off the back of that. Whether they're actually going hike interest rates, it's a completely other story. I'll break that down at another time. Sterling dips after UK jobs and wage data paints unclear picture. British labour market weakened in July, even as wage growth stayed strong, but the unemployment rate ticking up, which again we'll have a look at once we get around to the calendar. You can see stocks relatively negative. There's a couple of European indexes. FTSE slightly higher, obviously off the back of expectations for the Bank of England to not raise rates anymore. Sterling mixed, but it got hammered. Certainly cable got hammered a little bit earlier on, but the rest of the markets are pretty mixed. Commodities are pretty mixed, but oil's higher, like we just alluded to a couple of minutes ago. Bond yields mixed across the board, but the US dollar strong no matter where you look, obviously due to reasons that I suggested earlier. But is this move likely to continue at any sort of pace or any sort of aggression? I would suggest probably not before US CPI tomorrow. Australian dollar, Kiwi dollar, the trend is still down on them things. Kiwi dollar negative across the board, kind of in line with stocks, but Aussie remaining somewhat positive. So not clear risk off trading. You would want to see stocks negative, dollar higher, Japanese yen higher with your anti-Bolivians lower. That's not really playing out as of now, so I'm not going to read too much into that side of the analysis. US dollar strong, stocks weak, oil up as we head into today's US session. You can see we spoke about the unemployment rate yesterday at 7 o'clock. The unemployment rate ticking up slightly. Average hourly earnings also ticking up slightly, but we had a look at that. A little bit earlier on. Since then, we had the economic sentiment figures, which improved slightly on the last month. Any reading below zero indicates some pessimism. We had a number of readings below indicating potential negativity for the German economy over the next 6 months. But 14.7 to 12.3 to 11.4, slightly improving. Not really by that much though. Equities, you can see accelerating to the downside now as we've started this video. The DAX making an attempt through the lows, the Eurostoxx making an attempt through the lows, the S&P, the Dow Jones, the Nasdaq certainly not enjoying themselves as we head into the US Open in about 10 minutes time. So does that move continue though? I'd probably expect that to kind of chop sideways, really, to be honest. But bit of dollar strength across the board. You can see Aussie, Kiwi grinding lower, but some aggressive downside in euro, dollar and cable this morning. Negative data from Europe, albeit slightly above consensus, but still negative data from the UK as well. Dollar Swiss has just popped through the highest. Dollar CAD doing nothing. Bit of dollar strength plus a bit of Canadian dollar strength off the back of oil higher. Dollar yen pushing higher, seemingly wanting to close that gap and get up and fill that gap. Have a go at trading through these prices that were not traded through over the course of the gap at the weekend. Dollar index pushing higher, but really it is pretty sideways over the last number of days. But the trend is your friend, and the trend is still quite clearly higher on the US dollar. Dips continue to be bought, and it's really no surprise that has continued its move higher. And you can look towards tomorrow and think to yourself, US inflation tomorrow, are these gains likely to extend themselves? But the trend is higher. Is the market going to care too much about that print tomorrow? Certainly, if it's higher than anticipated, that is an idea for fresh longs on the dollar. But yields not doing too much, 10s and 2s not doing too much, but US dollar strength anyway. Again, gold weakness, so yields not driving the strength, just the trend continuing, dips being bought in the dollar, rallies being sold in gold. But in trade of the day was obviously oil through the top of this ascending triangle, fundamentals pointing higher, triangle pointing higher. Almost too easy of a trade when you're looking at it, but obviously longs through the top. You get a stop loss somewhere down here for yourself. Once you target, we haven't been at this high for a while. Back in November of last year, you would probably wish to target some of these highs back here, just above 92, just above 93.50. Price does get up there, that would be a decent upside target if you could get up there. But certainly the warning signs were there. I say warning signs, the opportunity was there. Get along some oil. Technicals aligning with the fundamentals. They do seem to make, they do make the best trades. But in terms of economic data, out the rest of this afternoon, nothing to kick markets into gear. OPEC's monthly report out today, which we've heard comments from them out already. Obviously no time, but we've heard them speak. Crude oil stocks change, the API's figure of it, but again, if that misses consensus, that should further or spark a further bout of oil strength. Crude oil stocks change a further 2 million barrels per day, further 2 million barrels due to be wiped from US inventories. Those two prints, 9:30 today, 3:30 today, hopefully will propel that oil move higher. But supply is tight in oil at the moment. OPEC seem to think demand will be okay. Oil prices higher do not seem a bad way to play it as of now. But US CPI tomorrow, we'll update a little bit further in the morning. We'll see what we think as we head into US trade today. But mainly, we gotta think US inflation tomorrow. Are we likely to see much move today or over the rest of the day? At hazard a guess, probably not.